There have been several news articles published suggesting that chocolate is inflation-proof, since the purchase of chocolate isn't affected regardless of price increases. But is this really the case? Introducing inflationary chocolate, debunking the chocolate myth. My name is Brad, and along with Annie and T, we are very excited to present our research. We will first look at the supply side of chocolate and the trends we can observe. This is followed by the understanding of the demands of consumers and whether these demands are changing. With these two economic aspects in mind, we will consider what corporations should change to their business models. We begin by observing the trends in the supply side of the chocolate industry alongside the consumer price index of countries that produce chocolate. The inflation seen worldwide has created a disturbance to the economy and the spending habits to several people in the world. We investigated whether or not this included the chocolate industry. We began with comparing the price of cocoa to US inflation as a basis for our understanding of inflation. Then we substituted the US with countries that are heavy producers of chocolate to see if there were any significant changes. This data set shows the close price of the cocoa commodity. The close price of cocoa is important for chocolate since it is the main ingredient in chocolate. As seen in the data, the close price has fluctuated drastically with a spike in the price from July to September of 2021. We will then utilize a bar chart in the background to highlight different countries' inflation. In this chart, we use numbers for the US inflation, which are underneath the close price of cocoa. Along with the unpredictability of the line chart, we see that there is a gradual rise in inflation in the US since March 2021, with a peak inflation percentage in June 2022 of 9.1%. The next two charts will detail the close price of cocoa with two countries that are leading producers of chocolate, the Ivory Coast and Ghana. We chose these two countries to try to determine if countries that produce chocolate are susceptible to great inflation. The trend for the Ivory Coast shows that over the 19 months of data, inflation has slowly doubled in their country. The most amount of inflation has occurred within the last quarter, with inflation of about 6.3% in September 2022. The trend for Ghana shows a much more drastic increase in inflation since the beginning of our date range. Because of these trends, we can deduce two things. One is we cannot accurately predict any changes in the close price of cocoa. However, the inflation trends that we have seen in the Ivory Coast and Ghana show that the supply side of chocolate is not as immune to inflation as previously thought. I would now like to turn over the presentation to Annie, who will speak on more of the demand side of the chocolate industry.
Just as inflation has affected the supply of chocolate, as Brad said, it has also affected the demand side. Consumer behavior has been greatly affected by inflation in the COVID-19 pandemic, and consumers of chocolate have been no exception to this. When comparing the chocolate industry to the consumer staples industry as a whole, the industry that chocolate falls into, we see that over the past 5 years, the net income margin percent has been higher for the consumer staples industry compared to the chocolate industry. This shows that while there has been growth in the chocolate industry's income margin, it is not as high as other goods within this category, especially within the past 3 years. Also, when comparing the chocolate industry to the consumer staples industry, the total revenue growth percentage has been lower than in the chocolate industry than in the consumer staples industry as a whole as well. This shows that the chocolate industry has not only seen slower growth in comparison to the consumer staples industry as a whole, but has been growing less and less, especially within the past 2 years. The question now becomes, why has there been less growth in revenue, and this year particularly? Typically, chocolate has been thought to be inflation-proof, and as something that consumers will not give up regardless of price, as Brad said. However, studies have shown that consumers are increasingly concerned with the price of chocolate since prices have been going up. Consumers are buying individual chocolate bars instead of large chocolate packs as they see this as more price-friendly. Chocolate companies are seeing their revenue slowed or even decrease. The price is not the only issue consumers have with chocolate, however. Consumers have also started to become more health conscious over the past few years, which may be another reason that consumers are turning away from chocolate as a necessary good and more of a treat. Within these two consumer segments comes the consumer dilemma for chocolate companies. The most expensive snacks are often the healthiest, so those who have the money to spend on them are preferring to buy those over chocolate. Chocolate companies are already losing these health conscious customers. If chocolate companies raise prices, which they may need to do due to inflation on the supply side, they also alienate those price-conscious customers too, losing both groups. So what can these chocolate companies do? Let's move to the next part, our corporate solution.
So, as Brad and Annie said, both supply and demand side of the chocolate industry are suffering from inflation. So, what should companies do to combat inflation or survive during inflation time? To answer this question, we look into the stock performance of North American chocolate companies. For most publicly traded companies, Hershey and Mondelez International are the only two companies that see positive growth over the past 12 months. Hershey is particularly interesting because it has the second largest market cap of 47 billion. However, its stock price jumped the highest since last November to 31%. Pretty impressive, right? Now let's take a closer look into Hershey's performance by comparing its index value with that of the S&P 500. We see the gap between two lines get wider and wider over time. This means that Hershey's performance goes opposite with that of the S&P 500 index. It has been going up while the majority of the stocks in the S&P 500 index has been going down. Now, some might say that stock price is actually more reflective of shareholders' beliefs rather than the company's performance. So let's look at Hershey's revenue then. As you can see, Hershey revenue has growth over time. It actually topped $10.1 billion in sales in the last 12 months of the third quarter in 2022. Okay, so now you're probably wondering why Hershey's performance is so over the roof. The secret lies in two strategies that they have. One, they become more regional in the US markets. Two, they become more diversified. In other words, they become more American and less reliant on chocolate. Let's look at the top line of Hershey's income statement at the end of each fiscal period. For the first strategy, in this table, you can see that Hershey's revenue in the US has always been increasing since 2018, and recently is an increase of 7.8 billion from 2020 to 2021. Whereas revenue from other countries is only 1/10 of the US and has been somewhat stable since 2018. So clearly, Hershey has been continuing to focus on their US market more than their international market. For the second strategy, Hershey being more diverse. So before 2018, they acquired private Breeze popcorn, and before that, it didn't really divide the income statement into different business segments. But since the acquisition in 2018, the income statement started having two separate business segments, salty snacks and sweet snacks. This version of corporate reinvention really worked for Hershey because Hershey at its core still remains as a snack company. It's not like it's trying to become like a metaverse company at all. It's still a snack company, it just has more snacks. During inflation, many companies will find themselves facing several crises. Some will double down on existing strategies. Some will diversify. Hershey did both. It goes against all the odds in the chocolate industry and become the legend of the chocolate myth. So, what should companies do during inflation? Just be like Hershey. Thank you for listening to our presentation.